If I tell you that you can grow your small account by just flipping a coin and guessing if the trade is a buy or sell, would you believe me? If not, that is exactly what you are doing when you are trying to do your account flipping with your $20, $50 or $100 account. I personally think that growing a small account is easier when you follow the strategies that I will share with you in this video rather than trying to flip your account just like flipping a coin toss. So before we get started, I want to warn you, please do not contact anyone through the comment section of this video. The only way to contact me is through the links in the description below. Now, let me give you some strategies that you are gonna use and that are gonna help you if you want to grow your small account. The easiest way to grow a $100 account is to place one big trade and risk all the $100 account in a 1-to-1 risk to reward ratio. In a few minutes, if the market goes in your way, you can double the account. Very easy, right? But the problem is the market is not always going to be in your direction. So sooner or later, you will definitely lose that account. If the market goes against you with one bad trade, you can lose the account if you are risking everything. So account flipping for me, I think it's a trap for new traders. Most new traders want to do account flipping, but what I think works is not account flipping. In this video, let me give you 4 strategies that you're gonna use today to grow your small account. The strategy number 1 is only place high probability trades. Do you know what high probability trades are? Tell me in the comment section if you do. So when you are placing a trade, we do our analysis, right, just to support our decisions. You have to understand that our analysis basically is to try and fulfill our self-fulfilling prophecy, right? So for me, high probability trades are trades that have confluence. In other words, I'm saying high probability trades are trades that you place after seeing a lot of things like support and resistance, trend lines, indicators, anything that you want to do. I personally use what is called the TAE formula, and we talked about this TAE formula in the Forex Mastery Bootcamp, and we said you need to see 3 things before you confirm that you need to place your trade. This can be market direction, area of value, entry triggers like candlestick patterns or even chart patterns, right? So to grow your small account, you need to be patient enough to trade only when you have a high probability chance of winning that market. If you want to learn more about high probability trades, you can check out our Forex Mastery Bootcamp for more information. The link is gonna be in the description below, right? Strategy number 2 is to grow your small account. You need big risk to reward ratio. When most beginners trade the forex market, mostly they get stuck at the same account size for a very long period of time until they start risking much and then blow the accounts. The reason why this happens is because your losses and profits are equal, and the worst part is when your losses starts getting bigger than your profits and you are getting emotional in the market. That's when you blow your account. You need to remember that the market always offers a 50-50 chance of winning or losing in any trade, right? So if you place any trade, you know that the market is gonna go against me or in my direction. So every trade is gonna have a random outcome, which means it's gonna have a 50-50 chance of winning, right? So for you to make money, you need an advantage, and one of the easiest way to create an advantage is to using big risk to reward ratio. If you use big to reward ratio, you are going to create an edge or what is called an advantage, right? So if you let the winners run for a long time and you cut the losses early, then it means after a long period of time you can make money. So if you are trading a small account, I would always advise you to get in any trade with over 1 to 2 risk to reward ratio. Meaning whenever you risk $1, you target to make at least $2. If you risk $10, target to make at least $20 or more. That's gonna help you in a long period of time. Strategy number 3 is to increase the lot size as the account grows. See, when you are trading a small account, you are taking some big risk, like 5% risk per trade, which is scary for most traders, especially when you get into a losing trade. But the truth is, your account is small anyway. So if you want to grow it, you just need to keep increasing the risk, but you do it according to how your account is growing. For example, let's say if you are risking 5% of your account per trade on a $100 account, it's gonna be $5 per trade. But when you grow that account to 200, now the same 5% that you have been risking is now $10 per trade. So if you keep doing that, and when your account grow, you are going to grow with what is called a compound effect, not with account flipping. Strategy number 4. This strategy number 4 is, it's not a strategy, but it's just a tip, right? I want to tell you that if you want to grow your account, just stick to one strategy for one challenge. Let me ask you a question. When was the last time you switched from a strategy to another strategy? So when you switched from another strategy to another strategy, did you get any change in your trading? I would bet all my money on you didn't get any better results. Why? Because I know that if you are a quitter, then you quit from every strategy without seeing any profits. So you need to stick to one strategy until your challenge of growing that account, so that you can easily track why have you lost this account. Is it because the strategy doesn't work, or is it because of your emotions, right? So if you stick to one strategy and if it doesn't work, and you are using the same risk to reward ratio, you are using the same emotions, you don't get emotional in any trade, you can say, okay, this strategy is bad. But if you switch from strategy to strategy, you will never know what is wrong. Is it the strategy, or is it your emotions, or is it just you as a trader? Then tip number 5 is using a position size calculator and a risk calculator. So most of the fans of this channel, I know that they are synthetic indices traders, but to my surprise, almost all the synthetic indices traders in this world, they don't know how to calculate their risk per trade, and this automatically means that you have a poor risk management, and there's no way that you can be consistently profitable in the market. So to try to solve this, we tried and created a risk calculator for synthetic indices, which we are going to put on our website for free in the next few days. I'm expecting this to take like 2 to 3 days for me to be able to put in this risk calculator on the website. So make sure you subscribe to the channel so that you are going to be notified whenever the calculator goes out live. So for now, here's what I need you to do. Number 1, choose a good strategy for higher probability trades. You need a strategy that gives you a good chance of making money in the market. You can check out the Forex Mastery Bootcamp below in the description, or just search for more videos on this channel. You can get some strategies that are gonna help you out, that have been helping other people also. Number 2, use a big risk to reward ratio to trade the strategy, right? Try to aim for 1 to 3 risk to reward ratio, or even more. Then number 3, stick to the strategy until you grow or you blow, right? What I mean is, if you put $100 and you say, I'm gonna grow this $100 to $500 in your account, make sure that $100, what you can do is you can either grow it with one strategy, or you can blow it with one strategy. Don't change from strategy to strategy. But first of all, before you do that, make sure you backtest that strategy so that you have maximum confidence in the strategy. Number 4 is the best one. Subscribe to this channel so that you get this synthetic indices calculator that's gonna help you to master your risk management in these trades.